You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 26th day of April, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. Our first live broadcast every trading day is from 9:30 a.m. to 11:30 a.m. Eastern. Now, that broadcast is reserved for members only and those who are taking their 1-week free trial. That is our live training room. If you've not yet taken your 1-week free trial, you can do so right now by simply going to mytradingiq.com, and at the top of the page you'll find a button that says, no surprise, free trial. Click it, follow the instructions. You'll spend 5 consecutive trading days with us with access to all of our resources. Doesn't matter what day of the week, even the weekend that you join, you'll still get 5 consecutive trading days. The afternoon broadcast, this one, whether you're listening live or after the fact, begins at 12 noon Eastern. Now, there's 2 different ways to join the afternoon broadcast. You can go to mytradingiq.com, scroll down to where it says afternoon broadcast, click the link, complete the 30-second registration form, and you're done. You only have to do that once, because every trading day going forward, you'll get an email about an hour before this broadcast starts. And so at 12 noon Eastern, all you have to do is open the email, click the link in the email, and it automatically logs you into our platform. And doing it that way gives you access to the question box so that you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, or you're just busy and you can't join live. So you want to check it out after the fact, or if you're out of the office and still want to join live, either way, point your browser to our YouTube channel. It's easy to remember. youtube.com/CFRN. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, we also archive each and every daily broadcast. Currently, there's over 2,200 daily episodes archived for your educational and viewing pleasure. If you're new to the world of CFRN, it's a great way to get to know who we really are. Not just what we say today. Anybody can say anything today. But what about 6 weeks ago? 6 months ago? A year ago, 2 years ago, even more. You, as a newcomer, have the luxury of being able to scroll back on our YouTube channel and pick days at random. You don't have to listen to the whole broadcast, but be sure to fast forward to the part where Michael is doing the recap of the live training room, where I'm doing the recap of the alerts. You're going to see a thread, or find a thread of continuity woven through each and every daily broadcast. Okay? Now, some days are better than others, but whatever happened on any given day, we just tell you the truth. We're super transparent. We don't sweep things under the rug. If we have a bad day or a bad trade, we're not ashamed of that because we understand that being stopped out or having a trade not do what you expect it to do is as much a part of life or is as much a part of trading as breathing is a part of life. So, with all that said, why don't we open with a word of prayer as we do every day? Now, we began a new topic yesterday. My story, your glory. Our scripture is 2 Timothy chapter 4, verses 7 through 8, and I'll share with you from the Message translation. You take over. I'm about to die. My life an offering on God's altar. This is the only race worth running. I've run hard, right to the finish, believed all the way. All that's left now is the shouting, God's applause. Depend on it. He's an honest judge. He'll do right not only by me, but by everyone eager for his coming. Now that was Paul writing a letter to Timothy, long before Pony Express or postage stamps or even street addresses. Have you ever traveled to a country that doesn't have street addresses? I have. Man, is that confusing. I don't know how the postman does it. But anyway, now let's do something different. Let's begin with the end. I read a book recently that encouraged the reader to write their own eulogy. That sounds, well, a eulogy summarizes a person's life, usually delivered or read after they pass away. At first I thought, what a depressing exercise. But being adventurous, I decided to give it a try anyway. I quickly realized why this is such a powerful thing to do. As I thought about how I wanted to be remembered when I'm gone, the first thing I wrote in my eulogy were not career accolades or successful financial investment portfolios. There was no mention of money or fame. Instead, I wrote about the most important things: my faith in God, my love of my family, and the ways I hoped to have impacted the world for the better. The author of that book encouraged me to keep my self-written eulogy and read it routinely every morning. I know it sounds a little macabre, but the idea is to start each day by remembering where you hope to be when you reach the end. Remember how you want to be remembered. Beginning each day with the end in mind can help us stay focused and on mission. Now, we just read Paul's words in 2 Timothy chapter 4. He seems to have penned a bit of a first-person eulogy himself. I want these words to be said about me, don't you? To fight the good fight, finish the race, and keep the faith. Begin your day with the end in mind. Ask God to give you a clear vision of the finish line of the race He is calling you to run, and seek His guidance every step of the way to stay focused and on mission. So something for you to think about. What do you hope will be said about you at the end of your race? Join me in a word of prayer. Heavenly Father, we come before you today with grateful hearts for the life and example of the Apostle Paul, who finished the race you set before him and kept the faith until the end. We thank you for the truth of your word that has been passed down through the generations, and for the encouragement and inspiration we receive from it. We ask that you would give us the same steadfastness and dedication to your calling that Paul demonstrated in his life. Help us to fight the good fight, to finish the race, and to keep the faith, even in the face of obstacles and opposition. We know that the crown of righteousness that Paul received is not just for him, but for all who love your appearing. Help us to keep our eyes fixed on Jesus and to live our lives in anticipation of his return. May your Holy Spirit strengthen us to persevere in our journey of faith, and may we always give you the glory and honor that are due to your name. We pray all these things in the name of Jesus Christ, our Lord and Savior. And everybody said, amen. Amen. All right, let me give you the numbers from around the world. Now, those of you tuning in via the YouTube channel already know the topic of today's discussion. Before we get into the charts and the recaps and all of that, the title of today's episode is, what is the difference between a professional trader and a retail trader? I used to have a co-host many years ago, and he and I vehemently disagreed on what separates a professional from a retail trader. You might notice he's no longer my co-host, but that's not the reason. That's a story for not even another day. That's the past. We want to live our life looking through the windshield, not the rearview mirror. All right. Here in the U.S., these are the numbers. The Dow is up 30 points. The Nasdaq's up 159. That's over 1.25%. The S&P 500 is up 17. The Russell 2000 basically unchanged, slightly in the red, almost 1 point. Now, we talked about this last night in the discussion group. I posted a chart and I told you what you should expect today. Not because I know some arcane market secret, but because I understand logic. Okay. In the commodity basket, and when we go to the charts, you'll see it. It's clear as day. In the commodity basket, crude oil is up a penny, trading 77.08 last. Gold is down $4.80, trading 19.99.70 last. Silver is up 8 cents, trading 24.95 last. In the Asian markets at the close, Nikkei down 203 points. Shanghai down less than a point. The Hang Seng up 139. No movers and no shakers. In the European markets at the close, FTSE down 38, DAX down 76, CAC down 64. Again, no movers and no shakers there. So that gave us a mixed day in Asia. It was a red day for the UK. And it's a mixed Radio Wednesday here in the US of A. only because the Russell is down a half a point. The other three major indices are in the green, and I think the Russell is going to turn green here momentarily. We'll see. Remember, the Russell 2000 represents 2,000 small cap companies, and I call it our man in the street because quite often the behavior of the Russell is a little more closely tied to what's going on in the real world, as opposed to the blue chip stocks, the Dow 30, and even the S&P 500, which is the bellwether. That's 500 large cap stocks. So those are the numbers from around the world. Now let's talk about this. What is the difference between a retail and a professional trader? You've heard the terms, you've probably wondered. So let's talk about it. And I'm going to use a generic term, securities, okay? That includes futures, that includes stocks, that includes Forex. And in the crypto world, there's still some discussion going on as to what is a security and what is not. But for the purpose of this discussion, we're going to just call it a security, while in fact, many cryptocurrencies are absolutely not securities by legal definition. When it comes to trading in financial markets, there are two main types of traders: retail traders and professional. While both engage in buying and selling securities, there are significant differences between the two. Retail traders are individual traders who trade for their own accounts and typically do not have professional training or any type of certification. They don't have any letters after their name. They often trade from home or personal computers and use their own capital to invest in the markets. Retail traders usually trade in small amounts and may focus on a particular market or security, such as an individual stock or stocks or currencies, etc. Professional traders, on the other hand, are individuals who trade on behalf of an organization or institution, such as a hedge fund or investment bank. And you hear me say every day when we go to the daily chart that it is those institutions, those hedge funds, who actually move price in the markets because of their account size, which is often in the hundreds of millions and even billions of dollars. They typically have extensive training and experience in the financial markets and may hold professional certifications such as the Chartered Financial Analyst designation, also known as the CFA. If you ever see somebody's business card and it says CFA after it, that means one thing: they passed the test. I'm not saying the test is easy, but you got to know a whole lot of stuff about a whole lot of stuff to pass that test. And yesterday we talked about how information overload can actually lead to analysis paralysis. Professional traders may trade in large volume and use complex trading strategies to generate returns for their clients. But let me just interject this, okay? We know trading the S&P E-mini, for example, if we buy one S&P E-mini futures contract during the day session, with most brokers, you've got to have $600 minimum in your account to actually make the trade. Now let's say you take 2 points on the trade with that one contract. you've just used $600 to make $100. You'd be hard-pressed to find a professional on Wall Street who has that type of consistent daily return. Why? Because of the complexity of it all, which is why we do everything in our power to make things as simple as possible. You only need to know enough to reach your goal for the day. Everything else is just stuff. Now, professional traders, while they have access to significant amounts of capital, they're still trading in the same markets that you and I are. Another important difference is the level of risk involved in their trading activities. Retail traders may be more susceptible to emotional decision-making and may take on more risk than they can afford to lose. Professional traders, on the other hand, typically have strict risk management strategies in place and adhere to strict trading rules and guidelines. Well, if you've ever been in our live training room, you've seen some of the most aggressive risk management humanly possible. So, while the world may categorize you as a retail trader, it's really not your account size that determines, or your risk management that determines. What makes you a professional trader at the end of the day is your ability to exercise strict risk management, follow a very strict set of rules. It's called rules-based trading. So we don't treat you like a retail trader. We treat you like a professional trader. We're giving you the training that professional traders get. Now, you may never end up in a chair where you're trading millions or hundreds of millions of dollars. But if you exhibit the same behavior patterns as a professional trader, then the only difference between you and a pro is the amount of money that you have access to trade. Also, professional traders have a more diverse range of investments, which can help to spread risk and maximize returns. They may invest in a range of securities, including stocks, bonds, options, and futures, and may trade across a range of markets, including domestic and international exchanges. Remember, these guys are working an 8-hour day behind a desk, punching a clock. They're expected to stay busy all day. Whereas we teach you the exact opposite. Get your goal for the day and put the mouse away. That's the best way to grow your account size. The bottom line with both retail and professional traders, while they both engage in buying and selling securities, there are significant differences between the two. As we've just spoken about, professional traders have greater access to capital, more advanced tools and resources, and a more diverse range of investments. They also have more extensive training and experience and adhere to stricter risk management guidelines. Retail traders, on the other hand, trade for their own accounts and typically have limited funds and resources available for trading. And that, my friend, is why 9 out of 10 new traders fail. And that's why we've worked so hard since 2005. And we really kicked it into high gear in 2008 to teach you what you need to know to reach your goal for the day because at the end of the day, that's all that matters. And the professional trader may not feel as pressured or stressed as you might, because they're going to collect a check at the end of the week no matter what. But you're trading your own account, and that brings with it a whole host of emotions. And that's one of the things that we teach our lifetime members, is the importance of separating their emotions from their trading activities. So there you have it, the difference between a professional and a retail trader. Let's go to the charts. Okay, these fibs, as you know, go from we've been in a downtrend over a year. The low was marked on October 13th of last year. The bounce from the year-long downtrend practically, well, this was October. The bounce came in February 2nd. That's when the high was put in at 42.44. So we had a leg and a retracement, a leg and a retracement, a leg that, if the trend were going to continue, would have taken out this high. But something happened. Our old friend, blue and climbing, which is the same as red and falling, except it's blue and climbing. It's called the CFMA1. Okay, helps you stay on the right side of the street. The green line's called the BBC, bull bear cross. When price crosses above it, we're bullish. Below it, we're bearish. Over here, we anticipate higher prices. Over here, lower prices. But when blue and climbing gets directly above price, it can become resistance. And it typically tells you that it's on its way to turning into red and falling, which again is bearish. Look what happened here. After this huge run up to February 2nd, blue and climbing turned to red and falling on February 10th. Leg, retrace, leg, where basically we put in a triple bottom here, here, here. Now, we dropped, big drop yesterday. You all saw it happen. We traded through the BBC. Now, the pullback to the BBC typically holds. It holds more often than it doesn't, across all markets, all time frames. But last night, I discussed in the discussion group, I posted a chart that we had in fact traded through the BBC. We talked about this on yesterday's broadcast, what it would look like if we closed the session below the BBC and below this old trend line. Well, we did. We traded below the trend line. Then we came up right off at the end of the day. We closed just below that trend line. We opened last night, and if you look at that post in the discussion group, I said the most logical thing to happen is for price to continue dropping to the 24% fib retracement. Because fibs are not proprietary. They're 14th century math. And these professional traders or institutional traders that we were just talking about, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Again, that has to do with account size. But you better believe that every professional trader out there have these same fibs drawn on their daily chart. And when we hit a fib on the daily chart, you can almost always expect a bounce. Now, the question I left you with yesterday was, would it be enough of a bounce to turn into a reversal? Or would it just be a bounce? Okay, currently we're trading, I don't know, right around 4103, 4100. Okay. The 24% fib, which we came down and touched to the tick. We talked about this yesterday. If you missed yesterday's broadcast, please, you owe it to yourself to listen to it, okay? And to look at it and to see it. It's a self-fulfilling prophecy. Not because we have crystal balls or any kind of magic spells or any market secrets. It's just logical, okay? When institutional traders around the world see price hit a fib retracement, they got orders parked there to buy. We don't park orders. We wait for the market to prove itself. But everything we discussed is coming to pass. Okay? Now, what next? We know where support is. The market has defined 4083/84 as support. The actual low of the day is 4081.25. And our lowest weekly trading zone this week is 4080/4081. Today's only Wednesday. Could we... Now, we had a big day yesterday. And often after a wide range day, we'll have a day of some quiet consolidation. So we could be trading sideways here for the next couple days. We may have some important news tomorrow morning, Friday morning, that moves the market. But since most of the indices are pretty close to their lowest weekly trading zone, I suspect that some kind of a rally is going to come out of somewhere based on some news event. But then, once the dust settles, price will probably return to where it was before that news came out. All right, Michael's going to be here in a few minutes. Let's see if we can get through all of these. Oh, getting ahead of myself here. Logic 247. Our 24/7 around-the-clock Emini alert service. It's not just the E-minis, but crude and gold and silver and the euro and bonds. We're in week 247 of Logic 247. Hey, I just noticed that. 247, 247. That's only going to happen once. Huh. Until we get to week 1247, I guess. This recap is valid as of 7 a.m. this morning. There have been additional alerts issued since then. But at 7 a.m. on the week, since the market opened Sunday night at 6 p.m. Eastern, we issued a total of 25 alerts. 4 never triggered. We were still waiting on 3 at 7 a.m. That gave us 18 actionable alerts, of which 3, or 17%, would have been stopped out based on not risking more than $300 per contract, per trade, less when possible, based on market structure and a very simple 3-step process that we teach all of our passport holders in their unlimited one-on-one mentoring sessions. Over the last 247 weeks, we've averaged 20% or less of the alerts being stopped out. The logic alerts can come out around the clock. Futures trade around the clock. We have traders around the globe. Their day session is our night session. So a logic alert can come out at 2 a.m. or 2 p.m., but it's always got time built in for you to get the alert, study the 30-minute chart, actually see with your own eyes the window of opportunity that the alert represents, so that when price gets there, you're prepared with your smaller time frame to take action. And as you repeat that process time and time again, pretty soon you don't need me to point out the windows of opportunity, because you start to see them yourself. And that is our goal, to make you self-sufficient. We want to get you to the point We want you to stick around forever and be a part of the family. But we want to get you to the point where you don't need anybody to tell you when to get in or when to get out, because the chart is the purest form of information that you can get. And some churches people will say, if you ask them, well, what denomination are you guys? Oh, we're no denomination. We just preach the Word of God. Do you? Actually, what's happening is what's being preached is one man, the preacher's interpretation of the Bible. You know, in the Catholic religion for a long time, it was very much discouraged. Lay people didn't have the gift of being able to read Scripture and discern what the truth was. Now, I'm not picking on them. There's all kinds of religions that have all kinds of rules. But that's just one example, okay? And in the markets, a lot of times, the big guys don't want you to know what's really going on behind the curtain. But I got news for you. You can go behind the curtain. You can become the man behind the curtain, okay? And that's our goal for you. Along with the Logic 247 alerts, we still have our original alert service, the Concierge Trade Alerts. Now, they differ in a couple ways. Number one, they don't come out around the clock. They're posted as a static report shortly after the Globex open each evening. Globex opens at 6 p.m. Eastern. This report was published last night at 6:35 p.m. Eastern. All of our members and all of our trial members had these target numbers last night at 6:35. Now, since this broadcast is open to the public, that's everybody everywhere on planet Earth with an internet-connected device, you, if you're not a member or on the trial, you didn't get these numbers at 6:35. So take a screenshot, because we're going to go look and see what happened. Oh, I should add, what do you do with the numbers when they come out? Make note of where price is at this point in time. It's always going to be between these two numbers, no matter what market. I use the ES as an example. It's always going to be between these two numbers. Make a note on your 30-minute chart where price was when this report came out. Then draw a line in the sand at the long target, a line in the sand at the short target. And from there, price gets above the 30-minute BBC, then it tells you it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. That's simple. Kind of like paint by numbers. You still have to look left to spot potential obstacles, previous swing highs or swing lows, which become potential support or resistance. And over time, once you become a lifetime member, you'll learn how price behaves around a weekly trading zone. Once you learn that, as a lifetime member, you'll always have lifetime access to the zones. They're published Monday morning at 6:15 a.m. Eastern. So as a lifetime member, you'll have lifetime access to the zones. Once you learn how to use them properly, they'll become one of the most important tools in your trading toolbox. But, and this is the big but, no, I'm not going to sing that song, but you have to resist the urge to make it more complicated than that. As long as you know which way the wind's blowing, it's pretty simple to reach your goal for the day. You may not become a rock star trader, or nobody may make a movie about your life as a trader, but you can earn a pretty good income, okay? As long as you stay in your lane. All right. So, I think our question has been answered, but we're bouncing off that 24 as discussed. So we'll see where we close today. Remember, if we trade through the low of the day and the 24% fib retracement, the next area we expect support is right here, where the bullish cross took place. Whenever you have a bullish cross that leads to an extended move, the first time price revisits the area of the cross, it will almost always be good support the first time down. The opposite is true of a bearish cross. That's when the red line crosses below the green line. Okay? All right. So, 30-minute S&P. All alerts are based on the 30-minute chart. You need to learn how to use multiple time frames. Otherwise, you'll get tunnel vision, and you'll never know why that trade got stopped out, or why all your trades seem to get stopped out to the tick. Okay? Multiple time frames are very important, and we'll go over those in your unlimited one-on-one mentoring sessions. The vertical line that you see on the chart separates today, Wednesday, from yesterday, Tuesday. You'll notice as price moved up to the zone, we found resistance. As it dropped to the zone, we found support. Pull back to the BBC holds more often than not. We drop to the zone, we find support, catch a bounce, but there's lots of selling pressure, so we continue down. Price always reverts to the mean. In our case, the mean is green, and we simply call it the BBC. See how it held here and here? Doesn't matter which way the market's flowing. Held here, held here, held here, held here, and so far it's holding here. But these were, I told you about lines in the sand, 4144, 4094. You can make your lines look like whatever you want. Just put them on the chart to serve as visual cues. When price is below the BBC and you have red and falling, it's just simply a matter of getting short on your smaller time frame, following the rules that Michael teaches you in the live training room every trading day. We pull back to the BBC, the pullback holds, we drop further, another pullback to red and falling, and then we drop to the zone. And we pull back to the BBC, the pullback holds, and we drop to the target again, all the way down to the zone. The zone's 4080/81. That's the lowest zone this week. We came within one tick so far of hitting the lowest weekly trading zone on the ES. Price right here is trapped. What do I mean by that? Okay, blue and climbing represents support, and we know the pullback to the BBC holds more often than not. So price is trapped here. It's either got to trade below blue and climbing support to continue down, or it's got to break this high, and that high, and that high to get to the zone overhead. Price is always trying to get to a weekly trading zone. If price is above the BBC, it's trying to get to the zone overhead. Price is below the BBC, it's trying to get to the zone below. Always. From the moment the markets open Sunday night at 6 p.m. Eastern till they close Friday afternoon at 5 p.m. Eastern. Now it is time for Michael to join us for a recap of the live training room. Are you here yet, Michael? Okay. We'll jump to the Dow. And whatever we don't get covered, when Michael shows up, he'll do a recap of the live training room. We'll then trade live for 30 minutes on TradingView. And then I'll come back and complete the recap of the CTAs. So we opened last night, consolidated sideways, pulled back to the BBC, the pullback held. Price got below red and falling. There's your goal for the day. Pull back to the BBC, pull back holds, and then we drop to the target again, offering you your goal for the day and more. Then we get above the BBC, but we run into the weekly zone. Remember, when price rallies up to a zone, we expect resistance. When it drops to a zone, we expect support until proven otherwise. Okay? Resistance, resistance, resistance. These are 30-minute candles. We then get below the short target, and our lowest weekly trading zone for the Dow is right here. And we're right at the target again. So a nice window of opportunity at this point for the Dow. Be right there. Or there. And most certainly there. Okay. Michael, just let me know when you're here. Russell. Right here is where the market opened last night. We come down to blue and climbing, which acts as support. Sends us up to the BBC, which we expect to be resistance until proven otherwise. So we get a drop and a pullback and a drop to the target. Is that 3 markets in a row where we hit the target? Why? Yes, yes it is. Now, what's happening? This is real important. We're above the BBC. Look at the step line. Look at blue and climbing. Okay? This thing could be ready to take off like a rocket ship. But let price get above here and here. There you are.
There I am.
We just been waiting on you. Okay.
Okay. All right. Let me bring this up over here.
Guys, we will finish the recap of the CTAs as soon as we're done live trading on TradingView. And first, Michael's going to give us a recap of what happened in the live training room.
Yes. Yes. Let's get into that.
Right. Looks good.
All right. Here we go. Good afternoon, everyone. Today is Wednesday, the 26th day of April, 2023. I totally forgot we had crude inventories today. Anyway, it's the 26th day of April, 2023. If you have not taken a free trial with us, go here to mytradingiq.com, and right here it says sign up for your free 5-day training now at 9:30 to 11:30. When you do that, you want to go over here and sign up for the trading platform, right? Now, DT Pro you would have to download, NinjaTrader you'd have to download. Just follow the instructions, watch the videos. If you want to sign up for TradingView, that is something you just sign up for. You don't have to actually download it. Sign up for TradingView and send us your username. Okay, once you do that, then we will set up a meeting with you and give you all the information you need to get into the room in the morning and make your charts look just like this. Okay, now the spreadsheet. Today, well, first, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 26th day of April, 2023. We made 72 ticks in the NQ. We lost 19 in crude. We made 12 in gold, and we're break even on the ES. That put us at 290 this morning. Today it took 34 minutes and 7 trades to get to the goal for the day. At that point, we're at $480 a contract, and we took a total of 18 trades this morning. So on the month now, we're at $7,770. Look at all those sevens. That's pretty lucky. 3 sevens. And it's the 17th day of the month. So on the month now, we're averaging $457.06. And today, well, we've got our goal for the day on 77 out of 79 days. Wow, that's a lot of sevens. Today's a lucky day. I feel it. Anyway, so we've gone 4 days now since our last non-green day. We've gone 426 days since our last red day. A red day means we did not get the goal for the day and we ended negative. I think we were down like $90 or something like that on that day. Anyway, on the year, we're at $39,922, and so we're 79 trading days, averaging $505.35 per contract per 2-hour trading day. If you were to quit when you get your goal for the day and you were to add 1 contract per month, then so far this year you would only had to work 20.5 hours and you would have averaged $1,343 per hour. Okay, $1,343 per hour. All right. Yes, let's get into the trades now. What we did today, we had on gold, we had just a couple of trades on gold. Okay, let me go here. I'll do this. And there it goes. Okay, so on gold, it did run pretty well today. When it did give trades, like this one here, this first one that we took, we got 6 ticks on that, I think. Right, it had this huge run. I only got 6 ticks, but it had a follow-up run right here and another one right here. This one I didn't do. It would have been a break even if I would have done it. And this one I wouldn't have done because that didn't put in a lower swing. Same thing with that one. Changed directions. It was a good trade there. You could have taken that I didn't. A trade here that would have stopped out. Changed directions. I wouldn't have done any of that until it really started to move down, and it did right here. And I took that one and got 6 more ticks on that. This one here would have been, well, it gave a little bit of profit, about 6 or 8 ticks profit, it looks like. Then it pulled back up. Wouldn't have done that because it didn't put it in a lower swing, or that. This one here gave a little bit of profit. Could have taken this one for a little bit of profit, and then that did not put it in a lower swing, so you wouldn't have done anything else. Those are all during the break. That brings us to right here, where we really don't have any direction on the long term right there. You could have taken the short there with the arrow if you wanted to. I would look for it to get down below right here, where you can see how much buying there was here in the past. So if it drops below there, it'll probably drop pretty significantly, but there's a good chance it's going to bounce right here where it is. So on the gold, we had 2 trades and we're plus 12. Okay, on the crude oil now. Crude whooped us today. I made a mistake on this first one. I actually got in over here, and I should have had my stop at break even on it, but I was looking at something else and I didn't move my stop fast enough, and then it stopped us out pretty much to the tick right here. Now, this was the trade here because it was a ribbon trade. All right, we didn't get the arrow on it because it wasn't coming out of the overbought at the time. All right, but it did hit the ribbon, and the black line right here was in the red. So you can take a bounce off the ribbon when the black line is in the red like that. If you're coming off a lower swing, which we were, the long-term direction is bearish, which it was, then you can take that trade. And I did, and I should have had my stop at break even, but I didn't move it fast enough. And it stopped me out to the tick and then did what it should have done. One of the things that was in our training, our lesson plan for today was leg lengths. And you can see that the leg length started up here. Started here, leg length, leg length, leg length, leg length, and that was where it ended, right there. So it gave 4 of those leg lengths on the way down here. That was part of the lesson plan today. Anyway, from that stop out, we had a break even here, another break even here, and then right here we picked up, I think, just 1 tick. Yeah, we went from -10 to -9, and then the next trade, we missed all this, and right in here, we had another -10 right there. Now that one was just a stop out. Never gave me enough to get the stop to break even. It was just a straight stop out. Then you can see price got really flat for a while there, and during the break, it started to move down again. So there was a good trade right in here. I wouldn't have done the second one. I would have just done the first one. And that is where we ended with all of that stuff this morning. That was gold. The crude oil, I'm sorry, that was crude. Sorry, that wasn't gold. On crude, that's what we ended with crude. We're -19 on crude. The ES, we just had 1 trade on the ES right here, break even. Now there was really nothing happening here with the ES. Look how flat that was. Just nothing happening with the ES. Once it started to move, we had this 1 trade, and then it started to move in the other direction. We didn't get anything until way over here, and I wasn't taking any trades that were not a deep pullback. We did finally get a deep pullback right in here, but we're at the end of the session. So there was a long trade right in there that would have worked out for something. It was followed up by this one way over here that I do not think I would have done. Turned around and started to give short trades in here, so you could have taken this on a deep enough pullback right. Actually, it didn't hit the ribbon. I probably wouldn't have done either one of those either, the way that the ES has been today. So that was the ES. Now the NQ is 12:55, so we have plenty of time to talk about this. Let me hit this and this on the NQ, and we'll go back to the beginning. Okay. Here we go. All right. So on the NQ, you see we had all this movement here in the beginning. We didn't do anything with it until right over here. Our first trade on the NQ, I actually had one before that, but it went on with one contract, and so I didn't count it. But we had this one right here was our first trade on the NQ. We picked up 22 ticks on that first trade. Then we stopped out on that one, put us back down to just +2. I should have had my stop and break even on this. The first 2 stop outs I had today were mistakes on my part. This one I should have had my stop and break even, but I didn't move it fast enough. And on the crude oil, I should have had my stop and break even, but I didn't move it fast enough. It didn't put in a lower swing, so you wouldn't follow anything else on the way down. I wasn't going to take the first trade here. That didn't give us a deep pullback. We finally got a deep pullback in here, but it went too deep. I didn't want to do that. So I didn't do anything with the NQ. At this point, I was sitting at +2 until all the way over here. Then here we got a 30 tick profit and went up to 32 right there. Right, then we didn't do anything again for a little while. Then all the way over here, we went from +32, +32 to +35. And then here we went from 35 to 47. So we had a 12 tick gain there. And then it got really flat here for a little while. Fortunately, I think I was training during that period, so we didn't do anything. Then we went from 47 to 48, and 48 to 52, and then 52 to 60, and then 60 to 72. And I believe that is where we ended the trading for the room. It was right about there where we ended the trading for the room. It got really sideways here. I didn't want to do this one until we had some more movement down in that direction. We didn't get any more movement in that direction. It just got really flat and sideways through here. During the break, really didn't give a bunch of nice trades. Gave a bunch of, well, not so nice trades. I wouldn't have done anything here until we got a deeper pullback. We did get a deeper pullback right here, so I would have done that, but it didn't follow through. This would have been enough to get about 30 ticks out of it, but it should have followed through here, and it didn't. It turned around and went this way. In here, this wouldn't have been a deep enough pullback after the change for me to want to take. I would have wanted a deeper pullback like this one, and this would have given us a break even. Could have taken this one over here. This would have given us some profit once it finally moved down. It'd still be in that right now. But that was the NQ for today. So the markets are starting to come alive a little bit right now. There was a couple of really flat periods today during the day. And pretty much every market had a flat period today, it seemed like. I don't know why, but this feels like a Monday to me. I know it's Wednesday, but it feels like a Monday. Now, we right now on the gold, right? Well, okay, let me just go into this. It's 12:59. The live stream, we're going to start here in just about a minute. If you go here to TradingView.com, go to Community Live Streams, and you scroll down to the bottom where it says Upcoming Streams. Right down here, click on that. When you click on that, to be entered into a live stream that we're going to start here in less than a minute. And at that point, you'll be able to follow along and ask any questions in here, or you can ask questions in the live stream. There's a live chat over there. We invite you to all go over there if you want to and ask questions over there, or just watch. It's up to you. You can watch from here as well. All right, if you've not taken a free trial with us, go to the homepage at cfrn.net or mytradingiq.com and sign up for the free trial. It's pretty simple. Right here is mytradingiq.com. Click on that. All right, if you're going to do it, download the trading platform and give us your username. We'll get you set up as soon as we can. All right, it is now time for me to jump into the live stream. Let me refresh this and undo that and do this. Show this and click that and share that and start the stream. All right, so here we go. All right, the stream has now begun. All right, so good afternoon, everyone. Now this stream, for everybody who's just following along with us from the last one, this runs from 1 to 1:30. So we're just going to trade in here from 1 to 1:30. What we're looking for here on the NQ, what we would have been looking for here on the NQ would have been a down close to pull this black line out of the overbought area right here. We're not going to get that right now. On the ES right here, if we had a lower swing, we would have continued the trend and we would have been looking for a short trade there as well, but we didn't get that. The the crude oil is definitely it's got us in a nice downtrend right here. We need that to pull back and get this black line right here in the slingshot up into the overbought area. Once it gets up into the overbought area, then we will look for an opportunity to get short over there. Okay, if this would have gone just a few ticks lower than it did right here, then we'd have a continuation of the trend. But as it is right now, we got to wait for that continuation to actually happen before we jump on the trade. Over here on the crude, you see we did finally get up into the overbought area, so now we're going to look for a down close in there. Now, I don't know, the people that are in here in the live stream right now, I don't know if it's the same group that was in here from yesterday. If you want to ask anything about any other symbols, you need to type them in. Okay. So what we're going to be looking for in here now, let me just close all of these things, close that thing. On the crude oil, we want this to come down out of the overbought area right here. On the ES, we want to put it in a lower swing from where it is right now. On the NQ, we want this to fail on the long side and to move down. All right, the gold is just going sideways. You really don't have any direction on the gold. So that is it. Now, as we wait for this to happen, well, the crude is going to give us a trade right here. So let's just jump on that crude trade first, okay? Right here, 76.38 is the spot to short crude. I just shorted 76.37. Now, every trade starts out with 10 ticks of risk like this, okay? You move the stop it to break even after you get 4 ticks in profit. Now, these are the rules for the trade setups. If you go here, sorry, go to trade rules right here. These are the rules for the trade setups. There's the entry, which we just did. And if you do the entry perfectly, then the next step is the risk management. So we have the rules for the entry right here. This would be a short trade with the slingshot. This is what I follow to get into this trade right here. All right, the black line of the ribbon must be on top in the red or silver. In the lead, the black line in the slingshot must cross below the overbought level. That's what triggered the arrow and the trade. So that's what got us in here. So I did the entry part correct. Now the risk management is the next part. The risk management right here, this is the 7-tick range bar. So my stop is at 10 ticks to begin with. You can see that is correct. And I move the stop to break even after I get 4 ticks in profit. Now in this case, I didn't get 4 ticks and it just stopped me out for minus 10 ticks. So I'll write that down. 1CL minus 10. Okay, so I stopped out on that crude trade. Now that in the bigger picture is just part of doing business. Okay, it doesn't affect anything in the long term. In the short term, it means I lost $100 a contract. Oops. In the long term, it's just a part of doing business. It's like paying a light bill. All right. So now that it's done, I don't want to trade again until it actually continues. So it's going to continue the trend. It's going to get down below this level right here, which is probably what it'll do. But I'm not going to be part of that until it actually does do that. Okay. So again, let's just jump over here to the rules for the trade. For a short trade without the slingshot, if price pulls up and gets into the ribbon, the black line on the ribbon must be on the top and on the red, right? And in the red, that's what this is saying. If this right here, it pulled up and it hit the ribbon. So now we have the down close right there. We're not going to take this because we should have had a lower swing from here. So we're not going to take this right now. But that would meet the rules right there. Okay. And so what you anticipate is the price is going to get down here. You know, if you get to the part about the trade rules where you do the risk management and you move the stop to break even, then the next part is the exit. So you look left, prior swing high or low, right? The swing low is right here. This is how far down it should go, right? Because every trade should do the same thing, right? Every trade should go like this and then pull back and then extend the trend like that, then pull back and then extend the trend again. To do that, it's got to go below that level right there. Okay, so what our indicators tell you is when you've pulled back far enough, and when to get out. It's this right there. Pull back far enough, precise entry, when to get out. Pull back far enough, precise entry, when to get out. That's what it should do. Okay. Now we don't know what it will do, but that's what you should see. Right. Our indicators help you anticipate all of that action. And you get the gentle coaching along with the indicators. If anybody has any questions about anything, just type them in, and I'd be happy to cover anything with you. Anybody that is in here yesterday, one of the symbols that was covered yesterday was the XAU USD was one of them. That was a popular one yesterday. I'll do it over here on gold again. Okay, I'll do it over here on gold again because gold's not really giving us anything. And I believe we did that on the 500 range, right? Yeah. Okay, so even right now, this isn't really giving us much either. It had a little bit of a move up right here. It had an entry from right here. If you wanted to take that, the long-term direction is really flat. So you really don't have anything going on here with that right now. Now, when the long-term direction is flat on this time frame, if you really wanted to get a trade in there, you could go to a smaller time frame and see what it's doing on a smaller time frame. And in this case, it is not giving you any direction there either. So you really don't have anything that you can do here. That's XAU USD. What was the other symbol that they asked about yesterday? Can the ES made a lower level and should work with a proper pullback? It really didn't go down any lower right here. You want to see it go down a little bit further than that. Again. Okay. You asked a question. You emailed in a question too. Did I just want to read my question? I think I did. It was about, oh, I know what it was. It was about that that fee, right? Yeah, when they prompted, now that I've now that I've logged off and logged back on, Ken, the fee that you were talking about, somebody checked the wrong box when they were filling out that thing, because going through it said, are you going to trade for yourself? And if you say no to that, then they assume that you're a professional trader. That's why that thing was happening. Okay. Because they just asked us to fill it out too. When I logged off from Georgia yesterday and logged back in here last night, they asked us to fill it out too. So I think it's probably an annual thing or something like that that you have to fill out in case those conditions change. Okay. All right. So we want this to put in a lower swing on this. I really want to see it get down a little bit lower than this. If we look at this, what you were talking about right there, Ken, was, I'm talking about it going like this and then a pullback and then another one of those. So we're kind of stuck right here at this level. Right? I really want to see it go down like this and then another one like that. You see what I mean? That's what I'm looking for in there. Yeah, erase all drawings on this and that. Okay, and I'll bump that back like that. So we really don't have any trades here. Do you guys want to look at something else? What was that other symbol that you guys wanted to see? It was yesterday, DLH or something like that was a symbol that came out yesterday. Yeah, that's this one. I think it was DLH. Let's see, DLH, we'll see if that rings a bell. That's a stock, DLH Holdings Corp. Well, we wouldn't be doing this on a 500 range. Yeah, so it's not DLH. I don't remember what it was. DL. That's it. Wasn't Dollar Tree. Okay, well, we're not going to do it on the 500 range. And there we'll do it 50 cents a bar. Look at that one. There you go. Okay, so earlier today. No, that wasn't today. That wasn't today. That was earlier this month. No, that was yesterday. Yes, no, Monday. Earlier this week. Monday. It gave us a nice arrow right there. Pull back right here. Great spot to trade. Pull back down to the ribbon. It didn't give you anything short or long. And right now, it looks like it's trying to turn something into a long trade right here. If you look at the retracement of the move up right here. Oops. Sorry, I didn't mean to do that. I don't know what that is. Remove that. What I meant was this. I keep mixing it up with the things that I'm used to in that other trading platform. There we go. Okay, so if we look at it this way, this was a 50% retracement right here. We're at the 50% retracement level, and we're bouncing off of that. We'll see what it does eventually here, but that's what it looks like right now. And that's on a 50 range. If you look at it on a dollar, this is what it looks like for the dollar. Right here, the dollar just gave it a long bounce this morning. Not Wednesday. Yeah, that's today at 9:30 this morning. It said buy right there, and I would anticipate it to get up to here to 55.43. Okay, that's what I'd be looking for on the Dollar Tree. Any of these giving us anything? Yeah. All right. Well, so far we've just got the one stop out here on the crude. Time is at 1:13. I didn't even write down what we had in all of yesterday. Yesterday we had 38 ticks on the NQ, 16 ticks on the ES, and 10 ticks on gold. And so far today we're at minus 10 ticks on crude. You want to see the Dollar Tree on the 50 again? Here it is. This is the Dollar Tree on the 50. So I'm still anticipating the same move up, 55.43 right there. Okay, it's not looking as pretty as it did coming off the ribbon this morning. Right, this right here was the move up this morning. And we can look at other symbols. Anybody wants to look at any of these other symbols? There's a whole bunch of them over here. Apple, Disney. Disney. I am so disappointed in that place. Microsoft, I haven't looked at that in a long time. What is that even at? Microsoft Corporation, NASDAQ, $297. What was that? I'll look at that on a yearly.
Time for them to do another stock split. Seems like they like to keep it down on about the $30 range, so everybody can afford it.
Sounds about right. What I was going to look at was down here in 87, because I had a chance to buy it in 87 when it wasn't very expensive at all, and I didn't. I had a guy.
2004, I had some money burning a hole in my pocket, and I was looking for a place to put it. And Apple was trading at $12. Yeah.
Well, okay, so right here, this is with Microsoft.
Oh, let me finish by just clear the air. I didn't buy Apple at $12. So.
Oh, you didn't?
No, I didn't. No, I didn't. I just don't.
Oh. And we never bought Bitcoin when it was a dime when we were talking about that either.
No, we didn't. No, we didn't.
All we needed to do was throw $100 at it back then, you know.
It's rallied nice today. It's up like 6-7% on the day.
What's it at now?
That's 29,000. It's got to break 30 and then hold 30 as a pullback. Then it can make a run at 40 and 50, then the all-time high.
All-time high. I owned it turn that all-time high.
$64. Or $64. 64,000.
Let's look at that on the 1,000 range. Okay, yeah, it's pretty choppy stuff right in here. Looking at it here. Crude oil is starting to put in a lower swing right now. Let me go back and look at that in a minute. Let's get on a 500 range. Okay, so on a 500 range, it's suggesting it's going to sell off a little bit right here, right now. And it just did sell off a little bit. But when you're talking about 29,000 bucks.
Yeah, cracking that. See, it got up to 29,810 today. But
right.
Really need to see it break 30 and hold the pullback. That's the key.
Yeah. Well, let's look at the futures again and see what we have. We don't have anything here yet on the ES. Now this, William, is what I wanted to see here on the ES. We now have a lower swing in place. Now I'd look for it to pull back and give us something. Okay. We don't really have anything going on with the NQ. Let me bump this back. And connect over here. I don't see anybody over there asking for anything in the live stream. So we'll still look over here. What time is it? It's 1:18. We have about 12 minutes left in here. Now the crude oil is starting to move down like it should have done. We want to see it put in a lower swing here. Okay, get down below this level. The ES just did put in a lower swing, so if that pulls back up, we now have the lead line, the black line in the slingshot is overbought. So we could end up with a trade there on the ES. Okay. Wait for that. Nothing on the NQ. These indexes are just, they're a mess today. They are a mess.
Sideways consolidation is what I suggested last night. We did get that bounce off the 24% fib retracement on the daily ES. So that's...
Yeah, I was thinking it would probably drop down a little lower than that on the daily. I don't know if it did today. I wasn't really paying attention that much, but
from the October 13th low to the February 2nd high, it hit the 24% fib retracement today, literally to the tick, and bounced.
All right, so you can see I'm short on the ES right now. We went short on this right here, pulling out of the overbought. Now it should get down to here, at least down to 94. And if I were to look left even further, I would think from 94, I would think all the way down here to 91. Now, if I look in the DOM, I'll see if I have support for that big of a move. It just took me out of break even. I'll show you my DOM again in a second. Here it is. It just took me out of break even. But we were short from right here. And the DOM is suggesting it's going to move down some more. 92.50 is what I can see right now on the downside. I'm out of the trade now, but we had this short right here that was a stop out on the crude, and we had a break even right here on the ES. Okay, that becomes yellow. And that is what we had right there. Okay. All right, so this should put in a lower swing, and the number that I gave you, it was 90, what was it, 91.50? No, it was lower than that. Look at it again. Look at it.
Crude just failed to put in the lower swing.
Yep, right here. So we're not getting a lot of follow through right now. And the thing with crude today, it was following through, but it was just taking forever for it to do it. It wasn't doing it on the first try. Like push down, push down, nothing. It wasn't doing it on the first try. And if you look at it back here, earlier today, it was doing the same thing. The first push down didn't do it, it was the second push. The first push down didn't do it, it was the second push. Almost every time.
What kind of high impact news do we have tomorrow and Friday? Any idea?
We do have high impact news both days.
Okay.
Let's see. Tomorrow we have advanced GDP and unemployment claims coming out.
That's always a big one. Unemployment claims.
And then we have pending home sales coming out at 10. Natural gas at 10:30. That's tomorrow. And Friday is a big one. We have CPI, I think, coming out Friday, right? Or core price index. Yeah. Core PCE price index. And
GDP. That's Canada's GDP.
Yeah. We have these other ones, Chicago PMI, that's the big one. That's coming out at 9:45. And the consumer sentiment inflation expectations are coming out as well at 10 on Friday. So,
okay.
So it's mixed in there pretty good on those days. Oops. Sorry, that's the stream. We'll go back here. So on crude, we want to see it put in a lower swing. See, the second push is what's doing it right here. The second push is what's putting that lower swing in. And the ES is dropping down. The number that I gave you on the ES, I believe, scrunch this up a little bit, was down here at, well, there was one at 87.50, but I think it was right here. 90.75 is what I said. 90.75 is what I was looking at. Right there. And I would think it ought to do that if you follow the leg lengths from here to here. From here to here. And then you do the same thing from there to there. That works out going left over here to 87.75. It's just taking forever for anything to follow through today. So trailing your stop, like we do, trailing your stop is going to get you out on most trades probably before you want to today. It's just the way the day has been. All right, so let's go back in here, see if anybody asked for anything special in there. Not yet. It is 1:23. We have 7 minutes left, and so far we have a break-even trade on the ES and a stop out on the crude. Not quite as colorful as yesterday, but it's something. The Bitcoin. Does anybody want to look at anything else on this? We could look at anything on this. Apple.
Crude did finally put in a lower swing.
It sure did.
But now it's got a long way to pull back.
Yep, the ES did too. They both did. Apple, I don't want Apple on a 500. Let's get Apple on a 100. Right, so every bar is $1 on this. Even that's a little bit big, Apple. Let's look at every bar is 50 cents. There, it's still kind of ugly. Neither one of those look good. But well,
yeah.
So
I'm so spoiled by the leverage that futures offer. I have a hard time getting excited about stocks anymore.
I know. I do too. It's like, for the time and the money that's involved, it's just so much easier to trade futures. Just get in there, get it done, make your money, get out.
During the day session, one ES contract with most brokers costs you around $600 to trade. That represents almost $250,000 in S&P 500 best of breed equity. I mean, there's just no better deal in town that I'm aware of.
There isn't. I mean, you can try Forex, but there's so many ambiguities in Forex.
Gosh. Yeah.
It's a mess.
Yeah, they talk about how trillions of dollars change hands every day in the Forex marketplace. What they don't tell you is that over 90% of that is bank-to-bank transactions, and the retail trader has no access to that. So it's sort of a shell game, in my opinion. And it's just my opinion. So.
Well, and the little ball that's being hidden underneath the shell.
Exactly.
Or the blank space. All right. So we were looking at this number down here for the S to get down to. Hopefully we'll get down to that. If it continues down to the leg length, it's going to get down here, and that works out also with the price action of the chart. Okay. This right here has, well, so far it's put in a lower swing on the crude. I know that in the next couple of minutes here, we're not going to have a pullback and get us into another trade. I mean, the most volatile market that we have in front of us right now is the NQ, and that's not even going to give us a trade. So I don't know. As far as the live stream goes, I don't know that we're going to get a whole bunch today. Sorry to disappoint you guys that are in there. But, well, we had a pretty good morning. This morning we ended up with plus 72 on the NQ, minus 19 on crude, plus 12 on gold, and break even on the ES this morning. Like I said, there wasn't a ton of follow through. If you go in here and you look at the trades that we actually did take, the crude was our nemesis today, but it stopped. One of the trades that it stopped me out on was my fault, and the other trade was just a plain old stop out. But it did have some decent trades. I got break evens on. These are the ones that, they didn't go straight down. They did eventually go down, but they didn't go straight down. This is the one I stopped out on that I should have had my stop and break even on. It eventually went down. Then we pulled back and got this one. Eventually went down, got this one. That one didn't eventually go down, but it went enough to get my stop to break even. Took some profit on that one and missed all those, and finally got this one. And this one right here, we stopped out on this one. Now, if we'd have waited for this one over here, it would have taken forever. We probably would have ended up with a break even on it. I think it had gone 4 ticks into profit on the way through there. So there wasn't much we could do with that. The ES is just about down to that first number that we had given. We ended up with a break even on that, and the NQ hasn't moved at all in the same time frame.
And crude is setting right at a weekly zone, 76.10/15.
Yeah, so it's not likely to go
probably
much deeper than this.
Yeah, that would be a good place for it to bounce back up to the ribbon and provide a short trade.
Mm-hmm. Sure would. Right in there. Sure would. Huh. It's a forest. Yeah, so let's just wait and see here. Well, we only got a couple of minutes left. We only got 1 minute left anyway. I think we're going to end up wrapping it up with just those 2 trades. Stop out on the crude and break even over here on the ES, sadly. I do like XPX options. Well, we can look at the SPX if you want. You can trade options on that too. And just look at the symbol. But we are out of time right now, though. If anybody's in here and you want to take a free trial with us, I know we really didn't get to show you much today, but if you want to get in here and take a free trial with us and see how this works, we do this 2 hours a day, every business day, 9:30 to 11:30 a.m. Eastern time.
A time period when the markets are much more active, so you'll see a lot more trades.
Yes, and if you want to look at yesterday's session, you can go there, and we had some trades in yesterday's session. You could see things moving around a little bit more. You know how to get to that, right? You go to live streams and go to recent streams, and ours, because it's yesterday's session, you could go through all these things, and right here it says see all recent streams, and click on that. And then you got to go all the way to the bottom and see show more streams, and then we'll be in there. Okay, this is yesterday's session right here. And we have a whole bunch of sessions going back months in there. If you want to go back months, they're in there forever. But if you want to go check those out, you are more than welcome to. But it looks like we're going to wrap this one up with just 1 break-even trade here on the ES and a stop out on the crude today. All right. I don't see anybody typing anything in, so with that, I am going to pass it back out to Fabulous Phoenix. I'm going to wrap it up for the live stream right now. If you guys want to take a free trial with us, again, go out to mytradingiq.com, sign up for the free trial right there. As simple as can be. If you do sign up for the free trial, give us your TradingView username. Your TradingView username will get you set up with your indicators right away. All right, so I'm going to stop the stream right here. And pass it back out to fabulous Phoenix, Arizona's Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I'm ready. Okay.
Excellent.
Recap of the recap of the morning session.
Today it took 34 minutes and 7 trades to get to $480.
Good job.
Thank you. Thank you.
Okay, guys, we will now complete the recap of the CTAs that we were working on. Market opened, down we came, blue and climbing. Okay, we don't want to short with blue and climbing. Let the pullback happen. Turn to red and falling. Then you got a clear shot right down to the target. And then this consolidation here, this is what I was referring to last night. After a wide range day, you will often see a day of some pretty subdued, quiet consolidation. And there it is. Okay. Still managed to hit our target, but other than that, this is not a market I would even want to trade, honestly. So, moving on to the NQ. Here's where we opened last night. Oh, that's not. I forgot to hang on. Hold steady. Right there. Aha. That's the opening candle last night at 6 p.m. Eastern. This was the closing candle yesterday from 4:30, 5 p.m. Eastern. So we opened and went from zone to zone in one 30-minute candle. We then pulled back to the BBC, but we had red and falling overhead. Now the pullback holds more often than not. This time red and falling won, and that pushed us down to the zone, below the zone, and an odd spot really for the market to find support and buyers to come in, but that's what happened. So you got to trade what's in front of you. It's just such an important lesson. Not what you think should happen, but what is happening. And our strategy and our indicators are not designed to outthink the market or beat the market. Everything we do is designed to help you see clearly what the market you're trading is attempting to do and why. Okay? Because all you need to do as a humble retail trader, as we are, is do what the market's doing long enough to get your goal for the day. So earlier in the broadcast, we talked about the difference between retail traders and professional traders and blah, blah. So we're retail, but we can benefit from what the professionals are doing as we learn how to read the charts and know where the important inflection points are, like this 24% fib retracement. While our indicators are proprietary, fibs are not. They're 14th century math. And Q we just covered. Okay. Zone to zone, back to the zone. Looks like we're going to attempt another run at the zone if we can get above blue and climbing, which is directly above price, so it could become resistance. But if we can overcome blue and climbing and the step line, that's a nice window of opportunity right there. Come on. Above 975. That's $200 per contract traded. 75 to 85. Yeah. Live with that. Okay. Crude oil. Here's where we opened. On the open, we're below the BBC, but we're above blue and climbing. That's a contradiction. You don't want to do anything here because this represents support and this represents resistance. You've got to wait until there is agreement, okay? That would be price getting above the green line, the BBC, along with blue and climbing, boom, right up to the zone where the market found resistance. The zone is 77.65/77.70. Our members and trial members had these zones Monday morning at 6:15 a.m. Eastern. We've published the zones since December 14th, 2009, every week for our members. As I said earlier, should you choose to become a passport holder after your 1 week free trial, it's going to take a little time for you to get accustomed to how price behaves around a zone. But only three things happen. 70% of the time is consolidation, 20% of the time is rejection, 10% of the time is the slice. And once you get your arms around that, the zones will become one of the most powerful tools in your trading toolbox. So crude opens, we run into resistance at the zone, blue and climbing, turns to red and falling. Down we go to the zone below. Now, on this move, where we find support at the zone. Again, the zone is 77.05/77.10. Support again. And we finally made it through. Now, when price slices through a zone on the 30-minute chart like it's not even there, this is what typically happens. When that move runs out of steam, which it did right at the target, price will typically retrace back to the zone it sliced through and then continue in the direction of the slice, which it did, to the zone where it found support and is currently finding support. But we're below the BBC. Blue and climbing is hooking like it's getting ready to turn back to red and falling. And so, huge window of opportunity down to the next zone, the lowest weekly zone for crude at $73/73.05. So again, we hit our target. Gold, two-sided action. Here's the open last night. Pull back to the BBC, the pullback holds. Red and falling turns to blue and climbing. So we get a nice leg up, then a retracement, and then a leg that takes us to the target, to the zone, through the zone, and we quickly reverse off the 9:30 Wall Street open, and that takes us back below BBC. Blue and climbing turns to red and falling. Right now we're consolidating at the zone 70% of the time, and I would say there's certainly a decent probability that we will reach the short target. But if you're already done for the day, you should simply put your mouse away. I mean, hard not to get your goal on this move down, okay? But if you didn't, hey, don't beat yourself up. There'll always be another trade. Don't let FOMO ever take hold of you. That's fear of missing out. Chasing a trade. When you see the market dropping fast or rallying fast, how many times have you said, whoa, I better get in? And the second you get in, the market reverses to the tick. And you're standing there going, how in the world could I pick the exact top or the exact bottom? How did I do that? Well, it's because you didn't wait for the retracement. Those fast moves are awesome. Watch them. let them retrace, find support, and then grab your goal for the day as price attempts to move to the previous swing high or swing low, whichever way the market is trending. In the Logic 247 channel, there's over 13,900 individual handcrafted alerts over the last 247 weeks. Every one of them is a trend trade as defined by the 30-minute chart, price, and the BBC. Remember, price is always trying to get to a zone. If it's above the BBC, it's trying to get to the zone overhead. If it's below, it's trying to get to the zone below. Silver. Here's where silver opened. Balloon climbing got above price, so it became resistance as it was on its way to turning to red and falling. So we got a pullback, but it held. Took us up to red and falling. Back again. See, this is difficult, right? When price is above the BBC, then below, then above, then below. It's probably a better market to trade. Okay, look where the market found support. At the zone that was published Monday morning at 6:15 a.m. Eastern. Now, we made a run at the long target, but we didn't get there. Period. Now we're attempting the short target, which we very well may see by the end of today's session. A 2-penny move in silver is worth $100 per contract traded. A $1 move in silver is worth $5,000 per contract traded. Last but not least, the euro. Here's where we opened last night. We consolidated at the zone. And then we made a run, hit the target, overcame the target, took out yesterday's swing high, and then faltered. Now, I could scroll left and show you why. There's a previous swing high back here. There's something back here. Caused price to stop in its tracks right there. Okay? Take a trial. I'll teach you how to spot that, how to deal with that. It's really important. So now we got red and falling. We're below the BBC. So a move down to the zone from here is probably not enough to give you your goal for the day. I wouldn't trade this. I would wait for price to drop below this zone and trade it down to this area right here. But that's what I would do. You do whatever you think's best. And we're back to the daily. We're off the low of the session at the 24% fib. If institutional buyers do not make a stand at the 24, that says a lot. It means that those who are in control of hundreds of millions and billions of dollars have no faith in the current market. Take out the 24 before we get to the 38% retracement. Remember, bullish cross right here, most likely good support. At least the first time down, good enough for a bounce. And then the 38 on the top of this old price channel. And the big boy, the 50% fib retracement. And again, the fibs go from the October 13th low to the February 2nd high. Become a member, a lifetime member, with no recurring fees, no upsells, and no nonsense. Go to eminifuturestrading.com. It's your all-access pass to everything we do, everything we've ever done, and whatever we do in the future. 9 out of 10 new traders fail because they don't have anyone to teach them how to do the job. Books are great. YouTube videos are great. Like I said earlier, we got well over 2,000 of them ourselves. But it's no replacement for a living, breathing teacher in an interactive environment where you can ask questions. Well, why did you take that trade? Now, typically, what will happen in the live training room is, as Michael is taking a trade, he will explain exactly what he's doing, why he's doing it, the rule behind it, and then answering any questions that you have. Because before you start trading real money, you need to put together 10 consecutive days in a row in Sim. You have to prove to yourself that you understand the methodology, the strategy, and the indicators. They're very simple. That's why you only have to put together 10 consecutive days in a row. That's when you get the green light to go live with one contract. Once you're trading real money, your goal is to increase your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a second contract. The beauty of the second contract is you're adding it with profit you earned in the market. First contract is funded with your startup capital. But number 2, number 3, number 5, number 10, number 20 are added one at a time when the blueprint says it's time, and only with profit you earned in the market. If you have the discipline to follow that formula as it's clearly spelled out in the blueprint, then the probability of you becoming a successful trader skyrockets. Doesn't guarantee you'll become the 1 out of 10, but it guarantees you'll at least have a fighting chance. As a member, you'll have around-the-clock support, access to unlimited one-on-one private mentoring. Now, we're not teaching you how to trade a specific market. We're teaching you how to trade. So the strategy, the methodology that you learn, and the indicators that you own for life are fluid across all markets, all time frames. That's futures, that's stocks, that's crypto, that's Forex. As a lifetime member, you'll receive the Logic 247 alerts around the clock. You'll receive the Concierge Trade Alert report each evening when it's published. You'll be in the Thursday night members only workshop, and you'll have access to all the previous workshops. We archive everything, okay? Everything a trader needs, all under one roof, one low price. No recurring fees, no upsells, and no nonsense. Did you get sick of that? I did. That's why we decided to do something different. Yesterday we talked about recovering from burnout. Today we're going to set the captives free. We'll talk about that for a couple days. Exodus 3:7. I have heard them crying out, and I am concerned about their suffering. That's how I feel about the 9 out of 10. For 400 years, Israel was enslaved by Egyptian taskmasters who oppressed them. You can understand their feelings of helplessness when you consider the areas in your life where you struggle for freedom from old habits. Whether it's anger, food, alcohol, drugs, sex, money, or abusive relationships. We experience a sense of powerlessness in our struggle. And repeated bids for freedom can produce increased feelings of hopelessness that leads us to give up trying at all. The Israelites cried out to God, and he responded. The Lord said, I have indeed seen the misery of my people in Egypt. I have heard them crying out because of their slave drivers, and I am concerned about their suffering. Exodus 3:7. God sees you, hears you, and is concerned about you. In Exodus 3:8, he said, "So I have come down to rescue them from the hand of the Egyptians, and to bring them up out of that land into a good and spacious land, a land flowing with milk and honey." How did he do it? Their deliverance called for the death of the spotless Passover lamb. After applying its sacrificial blood to their doorpost, they cooked and ate the lamb while dressed in their traveling clothes, staff in hand, ready to leave captivity behind. Today, God wants you to prayerfully prepare for your journey to freedom, not by your own futile human efforts, but by faith in the shed blood of Jesus, the Lamb of God who takes away our sins. 1 Corinthians 5:7. Get rid of the old yeast so that you may be a new unleavened batch, as you really are. For Christ, our Passover lamb, has been sacrificed. And that should make you do the happy dance. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.